What the bloody hell does this mean? 8,800 points. Oh, the index.
You've been a couple of weeks out of it.
Yeah.
You forgot what the market was at.
You and Mitch bloody ripped into me last week, didn't you?
It was what did Mitch say?
Oh,
It was like, he just blanked me. I thought I was out.
he was on the outer.
He just disappeared.
No, but then he also said that if I was going to run the Christmas party or something, that I would go down to the Yarra River at one of those communal barbecues.
Bring a slab of beer and a pack of sausages.
Yeah, he's not wrong. In other news, welcome to the Australian Investors Podcast. Drew, Meredith, how you doing?
Amazing. We had a great week.
A lot of mistakes happening over on the YouTube channel at Wattle Partners.
Ready to laugh. Always ready to laugh.
Always ready to laugh. So, top videos here on the Wattle Partners YouTube channel.
He's got it up.
Where are the mistakes?
Oh, you got to go to videos.
The 5 worst
and then popular.
Okay, so most popular videos here on the YouTube channel of Wattle Partners. Superannuation changes and how to prepare. The retirement mistakes that are costing you millions. 5 big mistakes. The 5 worst mistakes. Protect your retirement from a market crash. How much do you need to retire on? Actually, it's not too bad.
Yeah, it's a good spread.
Yeah, there's 2 optimistic and then 3
I don't
4.
call that. I wouldn't think that's heavy fear, to be honest.
Not heavy fear. Yeah. Well, Mr. Retirement can't be heavy fear.
I mean, it's what we talk about as advisors is that in some cases it can be hard to quantify and understand the value before you go. But if they can help you stop you from making one big mistake, then they can pay for themselves every year.
True, that's a good point. Very good point. Speaking of, I do have a question for you. What are 3 retirement mistakes people make?
Can I have 4?
Go.
I can never keep it to the requested amount. So the one big one I always see incredibly consistently is that people think their spending is going to be consistent once they get to retirement. That they're going to spend, you think you'll spend 100 grand, you'll keep spending 100 grand. Your retirement spending goes up, it goes down, it goes all over the place. As soon as you start, there'll be things that you spend less money on, and there'll be things that you spend more money on that you didn't think. Long answer.
No, that's a good one.
My most boring one, and we talk about this all the time, and you love this rule. I plus G equals total return. TR. I plus G equals TR. And all this says is that you need to invest for growth as much as you have to invest for income. And this is the same in retirement as well as, FIRE. I mean, that's kind of retirement too. We love FIRE.
Yeah, it's in financial independence. Yeah.
But basically, I've put some numbers in some of these videos actually, which shows that you can generate the same amount of income with a lower amount of capital as long as you're investing for both income and growth, not just investing for income.
Yep.
And the last one is 2. It's a 2-part.
Two-parter. It's a 2-parter.
One is not using super enough.
One question per analyst. It's a 2-parter. Go for it. Financial advisor.
It's a 2-part. Not using super enough. Like you'd be surprised how many people don't use their superannuation because they feel like it's not their money. You only have to trawl through the YouTube comments to see how people feel about governments and superannuation.
Yeah.
And the second part of that is not starting a pension. So many people we meet are over 65 or over 60, not working, and they haven't started a pension from their super assets. Once you start a pension, full access, completely tax-free, tax exempt, you might get a refund.
So tax-free on the investments as well inside,
exactly.
Right, as they grow.
They're the biggest by far.
Yeah.
And consistently.
Yeah.
But still watch the videos for the other 15.
Yeah, like there's been some solid comments here. You got some solid comments. That's a good one. I particularly like the not starting a pension one.
Yeah.
So for people that don't understand the tax implications, once you hit that magical button, things become tax-free, both the income that you receive, but also the investment returns inside the super fund. So why wouldn't you?
Exactly. It is a no-brainer in almost majority of cases. Almost all cases.
Update from Tesla. Finally.
Like about your car?
Yep.
Oh, you got another car?
Yeah, I ordered another one.
Why?
Because we've got to tow the boat. And
how big's the boat?
Not that big.
100-footer?
Yeah, it's a yacht. No, it's only been used once in the last 12 months. But as everyone does with money.
I think we're going to do it this Christmas. We have to do a recording on the boat together, not you with headphones on the boat.
If there was us plus whoever was filming, that would be a bloody nightmare. No, but most people
be on the jetty with a squid jig.
Buy emotionally and justify logically. So you say, why'd you get another Tesla? I'd be like, well, boat. You've got to tow the boat. How am I going to tow the boat? That's my logical explanation. But the reality is why do I have the boat in the first place if I'm not even bloody using it?
Just to buy a Tesla.
So I needed that to buy the Tesla.
Another Y? A Model Y? I mean, another Y.
Oh, another Y. I thought you were saying WHY.
You're the first person in the Cybertruck in Australia, right now.
No, imagine. I did put a name down. I was one of the first to put my name down.
We're still waiting, aren't we?
They won't come here. They're not safe for pedestrians.
Too sharp.
Yeah. If you get hit by one of them and you're a pedestrian, if you got like a 5-ton truck coming at you, and it's on autopilot, it's out of control. Yeah, not good.
All right.
So that's not coming. But
I can see you in your Calgary Flames jersey.
Calgary Flames. We are talking about fire here today.
They work really well.
Yeah.
Which division are they in of the National Hockey League in the US?
They're in one of the 4, as we're just discovering off air. Calgary Flames. I've got a Calgary Flames jersey on for people that are watching. That are listening, sorry. And I thought, look, they came fourth.
There's
That's
2
pretty
conferences, 6 divisions.
But then there are 4 different leagues.
2 conferences, 2 divisions.
Oh, there's what?
There's a West and East conference and 2 divisions.
So I was like, 4th ain't bad.
Yeah, they're in the Western.
But technically they're like 16th.
Yeah.
So anyway.
And the season finished like 6 weeks ago.
Yeah, getting the spirit. So no, good news for Tesla. There's some shout out to Derek who gave me a heads up that Tesla has got 4 ships on the way from Shanghai to Australia. Nice. So I should have my car in about a month.
I thought you were going to say 16 months.
Yeah. And everyone just keeps saying, oh, have you seen the ships that keep catching on fire? They're all Teslas. They're not. They're other cheap, crappy ones. So anyway,
Don't say their name, yep.
But we got a long range. It's now 600 Ks for an empty.
A Y?
Yeah, the new Model Ys were upgraded to 600 Ks. So that's pretty good.
And towing capacity?
Oh,
you know, 2.5 ton for your boat?
She doesn't leave the water, mate. She's too big. No, she's only a small little rig. So, no, surprisingly, they can tow,
80 foot?
Up to 2 tons, I'd say. Pretty easy. Yeah. How about you? How's your...
They say you get cash back when you get a Tesla. Do you actually get the cash back?
No, it just comes off the purchase price.
Oh, all right.
So it depends. Yeah. So
does that change your decision?
Randomly, because I had been delayed so long, in the time that I had ordered the Tesla, which was only like 3 months ago, the cost of the Tesla went down $4,000. How many people out there watching or listening? From the time you ordered it to the time you get it, it's actually gone down in price, and they actually give you the price reduction. They say we've reduced the price. Yeah, we've reduced the price.
Well, that's why people love them.
And I was like,
some people love them.
Sure. Yeah,
I was in the Eastern Freeway, in the traffic jam at the end of the Eastern Freeway this week, and I think I could see, I was surrounded by like 6 Teslas.
Yeah.
They're everywhere.
They're working class people.
I like the new logo. I don't like the logo, but they've got Tesla on the back now.
Yeah, I think there's a bit of improvement there. Yeah. You're still trying to sell the Porsche for anyone that's in the market?
Yes, for sure.
Yeah. Did you know they had leased that?
No, just normal lease, just finance, like lease finance.
Oh, okay. Yeah.
Not like a pre-tax.
Because I heard that you were talking to Mitch last week about that.
Yeah.
What are 2 things that you've been thinking of investing in over the past 2 months, Drew?
This is a 2-parter.
Okay. Jeez, should be an analyst.
I'm probably a bit late on this one. All right, I'll pick the best 2, and there's an unlisted one, which I thought could be quite fun. One I'm really late on is for some reason I've always been attracted to Palantir.
Yeah.
I mean, attractive may not be the right word, but the stock price is up like 500%. One, and I was very wary because if you listen to the Investors Podcast last week, my first tendency was to buy something that had fallen, and I had to take all my fallen knives out of the list.
Yeah, I remember. Yeah.
And then the other one is it's either a falling knife or something on a rocket ship. So Palantir is like big data analysis, automation, like learning things from the massive amounts of data that are available. They have military contracts, they have government contracts, but the share price is up like 500% in the last 18 months. That's why I thought about buying it. I haven't bought it. It just feels like the more the businesses we operate in, the amount of content, the amount of information we see, it's like surely there's a way to harness all the data to provide better solutions and outcomes and experiences to the people we're working with. So that's always one that's been on the back of my mind. And my portfolio's got a couple of very random big tech, like Palo Alto Networks, which I just thought was an electricity grid. I can't laugh. That was the first one. good. I mean, you probably got some things that are going to tell me it's like 700 price to sales. But
Peter Thiel owns 3% of it, according here to the Ticker Terminal. New sponsor of the show, Ticker Terminal, TIKR, the best terminal in the business. Peter Thiel, who was a PayPal co-founder, he only owns 3% of the company, worth $12.7 billion.
Yeah. How is Elon Musk getting his $30 billion option package?
Yeah, 44 billion Australian. Buy, hold, sell. Elon Musk's package.
Buy. I mean, how much value has the guy created? Of course. His problem is all his money's in the stock, essentially. So he's just going to get more and more stock. Apparently, it's going to make him focus more. But what's 30 billion? What's the market cap of that thing?
I don't know.
It's over $1 trillion.
Bring it up for you.
Yeah, I can't see it changing his motivation all that much.
1 trillion exactly is.
But they tried to get another one. It was like 120 billion last year or something, wasn't it? Right when he bought Twitter. Well, I almost said something else then.
Yeah. Twitter. So
we're going to get the explicit content on this week.
Elon Musk is worth a modest $401 billion.
But it's all in stock. That's US, so it's like 1.5 trillion in Australia.
Yeah.
400 billion US.
Oh, how good is that?
And everyone's still questioning. It's like, yeah.
What the flaming mongrel?
If
Mark Zuckerberg,
he could give $1 billion to every person in the world and everyone would have $1 billion.
Yeah, he could. He could give $1 billion to the US government and it would be out of debt.
Yeah. That was my first one. I was going to lean into, I've actually thought a lot about buying Tesla now that it was trading around $300. Didn't do it. I'm already holding it in a pretend portfolio anyway. And the probably real one is triggered more recently, and this is more thinking about, from my perspective, my portfolio isn't that big. How do I get some diversification? And kind of leaning on this equal weighting. So QUS, the equal weighted S&P 500. There's talk this week about the current conditions and then falling interest rates are generally better for smaller companies, but not necessarily just every smaller company. But QUS obviously is an equal weighted, which means all the medium, smallest companies have a similar holding to larger companies. Gives you diversification in a portfolio. So when I'm working with clients, I try to build it through each line, but when I'm doing it for myself, I don't necessarily have that amount of capital in my super that I'm managing. So how do I get that diversification immediately?
Yeah. But is that a good idea, Drew?
I think so. Would you it's like would you buy the IVV or would you buy QUS? Because
see this here. So they do, this is a pretty common chart. This is just showing
chart crime
for people that are, it's pretty horrible. So I won't actually use that. But basically, I was trying to look for Peter Thiel actually.
It's like growth versus value.
Yeah, I was trying to illustrate, there's actually a good chart that came out and made its way across
the gap never closes.
Came across Titter this week. And and it was in my feed. And I've got to say that I was looking at it and Drew's got a dodgy rib for everyone, so I'm trying to make him laugh.
Formally broke. I went to the doctor. He's like, yeah, it's cracked.
So he's cracked his rib. Yeah. So
I avoided going to the doctor for a week like every man.
He's basically the Dipper Domenico of the Australian Investors Podcast. He's just playing with a broken rib over here.
I've got my prescription.
And I'm trying to make him laugh as much as humanly possible. Anyway, as I was saying, on X, as we'll call it now, since 2022, the earnings of the S&P 490, that's the 500 minus the top 10 like Tesla, Amazon, blah, 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 blah. Oh, maybe. Well, QUS is a equal weight S&P 500. It's basically the same thing.
Yeah.
You just get 10%, less than 10%. You get, 2.5% in something, the top 10. Anyway, since 2022, the S&P 490 has not grown its earnings, which is massive.
Yeah.
So I would say that
as a net, but you're talking about 10 companies versus 490.
True.
I'm suggesting probably half of those companies have grown their earnings, the other half haven't. Some have gone bankrupt.
Yeah. So I don't know if it's necessarily a great idea. Because I feel like Microsoft, Amazon, they're just tolls on the world.
I've already got FANG.
Yeah. Oh, okay. Well,
So
that's
it's like, where do you go from here? Do I put more into FANG? Do I add a bit of diversification into smalls, knowing that I've got, this is my super and hopefully I'm still quite young, can't access it for quite a while. So how do I buy that diversification?
Yeah. Yeah, okay. So you've got Palantir, you've got QUS, Tesla.
Yeah.
What's your last one? You said you had unlisted.
Yeah, I mean, this one popped up in the Fin Review the other day. They're doing a capital raising, and this has always been super interesting to me, and I'm sure it will be for you at some point too, in the next couple of years. There's a company called StoryPark that came up in the Fin Review, and it does like the kinder communication between parents and children. And
I was wondering where you're going with that.
And like educate, like ed tech. This kind of, it's so massive, and it's still everything in kinder and school is like WhatsApp groups. Surely there's a better way to communicate with hundreds of people than via WhatsApp groups. No offense to WhatsApp. So StoryPark is a kinder one. I saw it. I just happened to see it come up in the Fin. The private equity owns it. Private equity owns Compass as well, which is more of a school one.
Yeah.
And that I found that super interesting. And that's something I would invest into if I could.
Just because you're a prolific user and
I just see the benefits it can provide in what are very cottage industries that have no efficiency and are very people reliant, relying on a lot of volunteers as well.
Okay. If I was to make you guess, so if Elon Musk is the most wealthy person alive,
is he?
Who's in the top 3 or 5 or whatever?
Top 3 or 5.
So whatever.
Bill Gates.
Okay.
Would still have to be up there.
I don't know the answer to that, but I'm going to say no. I'm going to say Steve Ballmer has more net wealth.
than Oracle.
That's Larry Ellison, yes.
Wasn't he Oracle too?
Steve Ballmer is the guy who took over from Bill Gates through that period where it's loosely believed that actually nothing happened.
Yeah.
But then he gave it. Then he moved on, and then they got the cloud and all that sort of stuff.
I mean, Jeff Bezos.
Jeff Bezos, yep.
But yeah, I think he's still up there in the top 5.
So we've got Elon Musk, Larry Ellison,
Warren Buffett,
and
Bernard Arnault.
Banana?
Bernard Arnault. Oh, Larry Ellison is up there.
So Elon Musk, 408 billion. Larry Ellison,
so he's
300
got 400
billion.
in Tesla and 6 billion in cash. And that's there's under-diversified.
Mark Zuckerberg, 266 billion.
He's been surging lately though. Like Meta's gone crazy.
Since he's been working out.
There's an article today about some Australian guy. I can't remember where I found it. It might have been on the Twitter.
On the Twitter.
Yeah. Where some Australian guy gave up $1.5 billion salary offer over 3 years to join Meta.
Really?
Yeah.
Wow.
Like NBA money.
That's way bigger than NBA money. 3 years, $1.5 billion.
Yeah. Probably in stock options.
Jeff Bezos, 235.
I haven't looked at this for a while.
Larry Page, 161 billion.
This is just US.
Jensen Huang, this is globally, I think, 156. Sergey Brin.
Steve Ballmer.
153. There's Steve Ballmer in at number 8.
I missed all the Google.
Buffet
alumni.
in at number 9, and he's got 140.
I did get banana.
Bernard Arnault.
Yeah.
139 billion. So, yeah, that's like, it's a hell of a list. But Elon is like a rocket ship.
No wonder he's a lightning rod for everything.
Oh, you get as that.
I mean, his label a lot. He's a lightning rod too, isn't it?
Wasn't it the famous line from Batman where he said, if you live long enough, everyone becomes a villain or something like that? Eventually, you are out there long enough. You're trying to cause change. You're going to ruffle a few feathers.
Yeah.
Not saying.
Speaking from experience? Or?
Yeah, just ruffling. So my 2 things. Did I say 2 things? But I gave 4.
Were any of these part of a video that you weren't, that's going viral on YouTube?
Oh yeah, there's the 2 stocks, which would be Intuitive Surgical and Costco. I still haven't bought Costco. I bought bloody WiseTech instead, which is not bad. I think I'm up like 40% in 3 months, but don't want to do an inverse Kramer on you now. But Intuitive Surgical is the Da Vinci machine. It does the robotic surgeries, and it did 2.4 million surgeries last year. And I haven't bought it for like 10 years that I've been following it. I've been following this company for like 10 years.
Is that an Australian company?
No, it's a US. And I've never bought it for like 10 years. And I've just watched the thing go up and up and up. And I'm just thinking, what the hell am I doing? At least buy like $1,000 worth, just do something. So I think I might just buy some Intuitive Surgical shares.
In your defense, shares haven't done much.
What are they doing?
They're only up 5% for the last 12 months. You're better off buying the index.
Oh, there you go. You're making me feel good. So
100% over the last 5 years.
Yeah, that's not cool. So Intuitive Surgical stock, yeah. She's Da
Vinci is basically the robot that can do it.
Yeah, robot surgeries.
Yeah.
It's still like human assisted, but yeah, it's incredible. And it's probably the company that I would say, I mean, it's like Amazon or Nvidia, but Intuitive Surgical, $160 billion market cap. It's a company that is so far ahead, competitive advantage wise, versus like literally any business. At the moment, it is effectively without competition.
Is it like the Cybertruck of surgery?
Yeah,
that they can't get it on the road?
Probably. But it's just...
Oh, wow, look at that machine.
Yeah, so for people that don't know the Intuitive Surgical robot, it's called Da Vinci.
That's why.
It's freaky. So it's like something out of science fiction. I'll bring it up for people that are watching. It's like...
So it hovers over the body.
It hovers over the patient. Over the patient. And then it's got like tiny little hands and arms. That's Da Vinci Resolve, which is an Australian company. Da Vinci robot.
Oh, it staples. It can clamp.
Yeah, it's got these tiny little like scissors on the end of its hand, little clasps and stuff. And it just hangs over you and it like runs around you and it's freaky as anything.
It kind of looks like a KitchenAid.
Yeah, maybe, but with little arms.
Yeah.
And it's freaky. Look at that one. You don't want that one coming at you. But it's incredible. Like the one thing that's amazing about these is that there's thousands and thousands and thousands of these machines in hospitals. They have about a 7-year useful life. But once you put the machine in, it needs parts. You can't use the same blade on the next patient, right? So there's consumables. It is a literal razor and blade model. And the hospitals...
Dollar Shave Club.
It's a major... Yeah. The hospitals love it because... they commit their CapEx budget to it, which might be like $1.5 million for one machine, but they know that there's going to be continual OpEx. So hospitals, which are naturally very conservative, are installing these machines at a rapid clip because there's so many benefits.
Yeah.
Because you could have a surgeon in Australia do a job on someone in New York or anywhere else in the world. So when there's massive bottlenecks in hospitals, you can have these machines, which is crazy, and it's good outcomes for patients and stuff. So really, really cool business. That's number one. Costco, which I've spoken enough about.
Have you been lately?
No, I'm actually thinking of going this Sunday.
I'm due a trip to...
Just a bit of a hot dog.
Yeah.
Yeah. But I end up spending a lot of money. Macquarie, I just like Macquarie as a business. I just think, this is Macquarie Group here in Australia. I just think it's a really cool business. They call it a millionaire factory for a reason. It's not because shareholders become millionaires; it's because the employees do. But I just really like the business. And maybe this is actually a good little segue into a quick question that we did have today, which is on LaserBond, which is a company that trades under the ticker symbol LBL.
Oh, Rowan Task asked a question. Oh, there it is, Rowan Task.
Yeah, Rowan Task. Rohan. And just quickly before we get to the answers of any questions, and any information that you hear on this podcast is strictly general in nature. If you couldn't already tell from my flat peak cap and a Calgary Flames jersey, don't take anything that you hear on the 2 Cents podcast seriously.
Or in public.
Yes, because you would need to speak to a financial advisor to get personalised financial advice. It's great to be back on the show here, but I can tell you that none of us want you to act on the information until at least you've read the product disclosure statement of like an ETF or a super fund. You can find that on the provider's website. Finally, past performance is not always indicative of future performance. So please, again, keep your wits about you.
Was this like a 3D printing?
Read the financial services guide on the Rask Group website, which is at www.rask.com.au/FSG.
Apologies, you need to get the end of that.
Yeah. What did you say?
Is this like a 3D printing thing?
Oh, LaserBond?
Yeah.
So LaserBond is a small company. I interviewed Wayne Hooper, the first person, I think I was the first outsider ever to go to this company's premises and interview them. The interesting thing was when I was at LaserBond, so I'll explain what it does in a second, but it's based in Sydney, Smeaton Grange, I think is where it is off the top of my head. So LaserBond, there it is. I rocked up and Wayne, the CEO, he was like, I think the first time we ever had someone here was Luke Winchester from Merriweather Capital. And he's like, we were just holding our AGM downstairs and then Luke walked in and we're like, oh, okay. This is a publicly listed company, right? So as you can see, if you're watching, it does surface engineering and it's got this laser that kind of repairs surfaces of mining equipment, of engineering equipment. Think like conveyor belt roller pins, big like ball bearings or wheels for Tonka trucks and
kind
that
of
sort of
like boiler
stuff.
making, but on a
big scale.
Yeah.
And they've got this technology, which is proprietary technology. They test it all and it can repair surfaces to over 10 times the original strength. So it actually it's like environmentally friendly because it repairs materials beyond the original strength. You don't have to, consume as many things. But there's 3 divisions inside LaserBond. One is products, which is like where it builds things for OEMs. And that's been struggling lately. And then there's the services business, which is what you can see on the screen, where it repairs things. And then the 3 is where it licenses its lasers. So the lasers are like the size of the studio, Drew, kind of like the size of a small bus. And what happens is they've got in these big warehouses, and the part will be driven in, and then it'll be forklifted or lifted into this laser, and the laser spins it and welds it at the same time and repairs it. Really cool piece of technology. But the company wanted to license these lasers overseas and hasn't had that much success. So the share price, as you can see, they've had some success.
I had a little pop.
Yeah, you can see the pop recently. So it fell down to a low of 36 cents. And this is a segue into this question from Rowan Task. He says, hi, Owen, thanks for what you do. No worries, mate. I started investing in 2020 with zero experience and have found your show a great resource on this investing journey of mine. My question is around LaserBond ASX LBL. The stock hasn't performed well these past few years, right up there until a few weeks ago, perhaps on the back of a pause on its US expansion. A good move by management, you think? For full disclosure, I don't own the company. So I think there's a few things. The longer you stretch out LaserBond's history, the more impressive it looks. If you zoom into what's happened in the last, say, 2 or 3 years, not that good. They've overpromised, I would say, and they've underdelivered, which as a small cap, if you've got you're putting out forecasts and you're suggesting something and then you don't deliver that, you get punished, particularly with a liquid company like this, Drew.
Yeah, the ASX, the listed markets aren't great for patient investors, really. Particularly when you're in this small cap space where you have your biggest shareholders can be fund managers.
Yeah.
And if your share price isn't doing anything, well, they're going to move on and try to find something else to keep up.
Absolutely. So this is
short periods of time.
This is very tightly held. So internally, the Hooper family, and staff own a lot of this company. The market cap is $64 million. It's profitable, pays a dividend. If the bottom line is this, the products business is struggling, and shout out to Growth Gauge on A Rich Life. There's a fantastic article on the Rich Life website about LaserBond. If the company can at least just maintain the products division, and if the services keeps growing, the services division, that puts it in a very good shape for the next few years, I think personally. Now, those are 2 big ifs. The other thing is, I think with LaserBond in particular, it's a business, Drew, that's in mining and engineering, and it requires a lot of people.
Yeah.
Apprentices, boilermakers, engineers, these types of people. And when I caught up with Wayne a few years ago, the first thing he said to me was, it's so hard to find people. We just need to find people. So they've been investing really heavily while trying to expand this thing over in the US, North America. They've bought other engineering firms. I would say if the company hunkers down and focuses on its costs, which is what it says it's going to do, I actually think that the best could be ahead of it. And it's a high risk small cap stock. But final thing I'll say is when you're investing in small caps, don't let the share price tell the full narrative. Focus on the business and zoom out. That would be my 2 cents.
And I always feel like when the company left, was that when the share price tanked? Maybe it was slightly before. I think that people assumed it was going to leave, not expand at the US.
Yeah.
But I think sometimes sellers are just waiting for a reason to sell sometimes. And that just triggers people to sell even if it hasn't changed the nature of the business. Like you look at their announcement, I don't know the company at all, but I looked at the announcement and saying they're going to pull back from their planned expansion to Europe because of what's happening in tariffs and all the impacts everywhere. And it makes complete sense from a business perspective. You don't have a real operation there. Why would you keep investing money when you don't know where it's going to be and you need to grow your Australian business? So the decision seemed to make sense, but the share price kind of, I think it's just people were waiting because of where the share price has been, and they just used that as a reason to get out.
There's a really interesting thing that happened locally, actually. They were going to license their technology, which is these lasers, to a company here in Australia. And it turned out that they would be licensing their technology to a company that would then also probably be considered their competitor.
Yeah.
So what they did is they just went and bought a big chunk of this company and have an option to buy 51% of it in the near future. So other companies recognize the potential of what LaserBond has created. And I think that provided management can just, kind of maybe not overcapitalize, I think there could be a bright future for this. But it is a risky business. Like, it's a small cap business. For many years at a time, it does go sideways and it's quite volatile. So
I'm just refreshing the raskmedia.com.au/portfolio page at the moment, and it's looking good.
Yeah, Dizzy Rascal's up 4.5% in the $10,000 community portfolio, for the $10,000 challenge.
Who'd have thunk it?
What's doing well for the community? Mater.
Poor Kev too. I think Kev too, he spent his winnings because he's already in Europe.
Is he really? Yeah, he's taken off. His KKR winnings. KKR was down 20-something%. Now it's back to just down 6.8.
It was up 30%.
It was at the very beginning, wasn't it? Yeah. Soul Pats, which is Washington H. Soul Pattinson, recently did a bit of a takeover/merger, 25% in the green. And then Vulcan, obviously a dog, down 31%. Still, woof woof. This is the best one, brought to you by yours truly. That's mine.
It's not the best one.
But it's coming, Drew. It's coming.
Is it though? I've
been saying this since January 1st. Watch that leverage, baby. Watch that leverage.
Your GGUS is finally positive.
GGUS.
Isn't that equal weighted, or is that just S&P 500?
I think it's S&P 500. I don't think it's equal weighted. You're testing me now. But can you find out? Do fact check that. Look at that. GGUS, 2.85%. And now everyone that watches the show regularly and listens knows what GGUS is capable of. 2 times leverage, baby. If Trumpy does something to make that stock market rip, you can bet your bottom dollar that thing's going to take me to the victory pole.
And if he doesn't?
Well, then I'm cooked. We've got a question about that.
Diversification. 7% in Nvidia, 7% in Microsoft.
This is the crazy thing I keep coming back to. If you look at something like GGUS, which is a leveraged ETF on US shares, versus FANG, FANG has outperformed.
Significantly.
Not just recently, but like 5 years.
Yeah.
It's crazy.
Why would you diversify?
Why not just own FANG?
I did it well last 3 years just by buying FANG.
Just buy FANG.
Why would I change anything?
So what else is doing well for me?
Westfarmers.
The conglomerates are back.
Shocker when you put that in.
Are back. XRF Scientific is back in the black. So just Home Depot, absolute. Oh no, it's only down 4% currency adjusted terms.
If you could trade one thing at the moment, what would it be?
If I could trade away one thing?
Either buy or sell.
I'd buy more GGUS. Well, as Luke said on the bloody podcast a few weeks ago, I'm trying to win. This is a silly portfolio. I'm just trying to win. I took this as a more educational portfolio for the good people.
All right, they're making excuses.
No, like it's equal weighted. I just tried to show a bit of diversity in the different types of ETFs and shares and blah, blah, blah.
Down, yep.
And 8.01% is what my scorecard is looking like on the Navexa scoreboard.
Oh, up to 8.07 because it tracks live. Oh, no, it just dropped to 8 again. Sorry.
Oh, gosh. Well, Drew Meredith's portfolio, the mighty everything portfolio, 9.57%. That's very good, sir.
On a run here.
Well done to you. His major winners are...
All of them.
We've done well. No, you got Tesla down 25%.
That's the only thing that's...
Nvidia, 27% in the green. Microsoft, 19%. Pro Medicus, where'd you get that one from?
27%.
28%. ResMed's looking pretty proper at 17%. What's that? What's at the top there? Is that
Munro Smalls?
Munro Small Cap, 10.8%. So it's really only Tesla. So question to you then, if you could buy or sell one of your positions, what would it be?
I would buy resources.
You'd buy resources like that QRE thing?
Yeah, I reckon I'd add some more resources.
Is that the beta shares?
QRE, yep.
Resource
sector.
Why is that?
I mean, if you think on traditional metrics in the whole market, I mean, a lot of the top end of the market looks overvalued. What's the part that's starting to run at the moment? Falling interest rates, supportive to the economy, resources kind of make sense as being undervalued and potential. Markets always rotate between sectors. It feels like it's been happening in the last few weeks as well, where there's this rotation into resources.
Yep.
And I've got a pretty big holding in Tesla already, I think. So.
Yeah, okay.
If a Tesla was down 50% like it was, then I'd probably top it up. But I think it's going to, this tailwind in the back end of the year. But $30 billion options, Elon will be focused again. It'll be fine.
But if you say $30 billion of options, whatever, his net worth is $400 billion. So that would mean that 40 billion Aussie, well, in US dollars, would you say 30 billion
It's like
US?
an emergency cash account for him, basically.
It's like 7.5% of his wealth.
If you hit a yacht on short notice, then yeah, he's got that if he needs it.
It's 7.5% of his wealth, and he just got paid 44 billion. But it isn't a big chunk of Elon's net wealth in SpaceX. Isn't that where the majority of it is these days? I could be wrong about that.
I think a lot of it's in Tesla, isn't it? But how do you break it down? SpaceX isn't listed, is it? Oh, there's raised capital so you can see what it's worth. I think the Boring Company, wasn't he trying to put them all into one?
So he owns about 12% of Tesla, excluding options. He's pledged half of his shares as for personal loans, worth 3.5. He owns 42% stake of SpaceX. That was valued at like over 100 billion.
Yeah.
He bought Twitter for 44 billion. What is it? What is Twitter even? He got rid of the name, the URL.
Was that 40 or 4?
He owns 44 billion.
Everyone was so worried about that when he bought that.
Yeah, I don't remember that.
That's what his option package was.
Yeah, yeah. Musk owns an estimated 54% of XAI, which provides services, as far as I'm aware, to both Tesla and X. I use Grok a lot, to be honest.
Yeah,
I probably use Grok more than I do use Grok more than ChatGPT these days.
What does that do?
It's the same as ChatGPT. I'd argue maybe even better in many ways. Ways.
Good for like clickbait, YouTube.
Yeah, yeah. Good for clickbait, get rich quick schemes, that sort of thing. If you want retirement mistakes, stick
YouTube
with
tasks.
OpenAI.
Yeah, go to something old fashioned like
go ChatGPT.
Anthropic.
Yeah. But no, there was a question about leveraged ETFs actually. Actually, I'll get to that in a second. Other news this week. GlobalX has launched its A300 ETF. I should give a special shout out because this has been a long time in the making. GlobalX is a sponsor of the Australian Investors Podcast. A300, Drew, have you taken a look at it?
Human invest into the ASX 300, and there is only one other ETF that does the 300, not the 200.
And who is that?
Vanguard?
Yes.
Yes.
And the difference is the fees.
Is it cheaper?
Yes.
How much cheaper? I mean, it's like 0.04%.
Yeah.
Versus 0.05%.
Nah, it's like, I don't know, I'll get up.
0.06%.
I should know this off the top of my head.
Is Vanguard going to respond by dropping theirs by...
I don't think they will. They didn't respond to anyone else doing it, but eventually 0.07.
Oh, that's like a 60% drop cut.
Yeah, yeah.
That's huge.
From 0.07 for Vanguard to 0.04 for GlobalX.
And how many billion are in the Vanguard?
Like many, many billions. I don't know how much, but there's a lot in there. It's the biggest ETF in the country by a long way.
Give it a nudge.
Yeah, I don't know. Where do I get this on the fact sheet here at Vanguard?
That's would you switch between those two options because of a 3 basis point difference?
So Vanguard's ETF is $21 billion. The total fund, because it has an unlisted fund as well, is $44 billion.
No, that's 3 basis points on 21 billion is a lot.
Yeah. Yeah, I don't think you get many people switching, but you'll probably get people...
New money
coming in.
Maybe new models being built.
Yeah. And it's...
And they have to buy the FTSE Australia 300 index. They can't buy the S&P because...
They'd be licensed. Yeah. So the way... I actually did some education on this morning, just for everyone's benefit. Typically, only one ETF has the rights to an index at one time.
They negotiate each time, yeah.
Yeah, so like someone would pay like S&P ASX 200, they pay the S&P Standard & Poor's. Same people that produce Beaver research. So they'll pay them for the right to use it. But yeah, A300, it's out. I wouldn't be surprised if it gets a lot of flows pretty quickly because a lot of people would be why not? Just go with a slightly cheaper option. But there was what else is making news actually? Because I do have a question I want to get to about gearing. What else is making news?
I mean, it's not a bee in my bonnet, but ASX has been up to a bit this week.
I mean, so what if they wrongly attached a bloody takeover announcement to the wrong company and then it tanked? And I mean, give them a break. So just the ASX.
TPG Telecom had just announced like a massive capital return. Company turned around, changed completely. The next day, they were taking over Infomedia, which they had no interest in. So the ASX linked the takeover offer from TPG Capital Asia to being TPG Telecom for this company, and TPG shares fell by 5% on the day. Interestingly, ASX, which triggered it, fell 10% the day after. And the treasurer came out and said he now intends to end ASX's monopoly. I find this really interesting because I was very attracted, maybe wrong words, just going. Very attracted to ASX after the first kind of stuff up. So I'm like, the crypto blockchain thing, they'll be fine. They'll sort that out.
Yeah. I
see value when things have fallen. I did not buy ASX, but clearly there are bigger issues coming down the line for this one after. They also announced this week that they're unfortunate timing. The same time they're getting told they're going to lose a monopoly, not that it's official, that there's increase of like $30 million in expenses to deal with all the ASIC compliance that they're undertaking at the moment. So I thought that was what was making news this week. I don't think there's. Yeah,
look at that. Yeah. Well, TPG is the latest victim.
Yeah,
down from $5.65 to $5.24. So they've taken like 8% off the company, basically. Is that what I'm?
Oh, it was 5% on the day. I reckon some of it's market movement though.
Oh, okay.
Yeah.
Okay.
I don't think you blame ASX for all of it.
Yeah, well, I know Rob Milner, chairman of Washington H. L. Pattinson, which is one of the biggest, or if not the biggest investor in it, was not happy. He was blown up. Which you would be if you had tens of millions of dollars on the line, if not more.
All over the Twitter.
Yeah. Infomedia, I think, is a Seneca special. I think they own Infomedia. Yeah. Cheeky little devil. The dome over there.
Maybe they had a short on TPG.
But there is another stock exchange, people. Let's be honest. There is another stock exchange.
Oh, what is it?
SIBO.
Oh, SIBO. All right.
CBOE. It used to be called Chi-X.
How do you trade on SIBO?
Kind of like a tea, like a herbal tea. But then they changed it to SIBO, which makes sense.
How do you trade on it?
You don't have to worry about that, Drew. It just happens.
Oh, it just happens.
Yeah. So this is a bit of good bit of trivia for people.
Care of it.
Yeah. So the way the brokering system works is they connect to the stock exchange that they want to connect to. So sometimes, for example, if you go to sell BHP shares inside your CommSec account, you might see, if you actually look in the trade section, you might see a little, I think it's denoted as CX or AX. And what it actually is telling you is which exchange that was settled on. Because if you think about it from a CommSec perspective, being the biggest broker, if they could sell your shares through on SIBO or sell it on ASX, it doesn't really matter to them. They'll just get the best deal.
Whatever volume is, whatever price it is.
Yeah, it doesn't matter where it settles through. So they connect to both, and more brokers, it seems, are connecting to SIBO. And dare I say it, the ASX won't want me to say this right now, bit of a PR crisis, but more and more ETFs and fund managers are using SIBO, not ASX. And that's a big deal for them. So together with the whole private market stuff, there's a lot of pressure on the ASX, the company right now.
It's why monopolies don't always work.
Yeah. Let's have a look. How do you actually go ASX?
Just like that. Or ASX share price.
Let's go share price. See what it's doing. So you're saying it was a bot. Oh, bloody hell. It's hard to Google the ASX's share price when every company's on the ASX.
That's for that alone, they shouldn't lose the monopoly.
They haven't performed well. 20-year time horizon they have.
I reckon it was around 2023 where I was interested in them before that extra fall.
Yeah, so they've risen since 2013. They've risen from $30 up to what they are now, which is like what's that, like $60. They paid dividends along the way. I've always just found the shares to be expensive because everyone knows it's a monopoly. There's not often a great opportunity to buy monopolies at fair prices. That's a good lesson for people that are listening to this. Is like, if you're going to buy a company, it's very rare that you buy a great company when there's nothing wrong with it.
At a cheap price, yeah.
Yeah, like everyone's bought FANG stocks and all that sort of stuff. That's been the outlier, to buy a good-looking company that just keeps going.
Yeah.
It's very, very rare. Normally you have to get one with a few hairs on it. So this might be an opportunity to buy, Drew.
No.
Not giving it a go.
If you could show like Drew's interest peaked in a chart, it would be after that big fall in 2023.
Yep.
Before it had the subsequent fall. And you could put Zip up, you could put AMP up, you could put Magellan up, and my interest peaks. And what I've learned to do is not follow that interest.
But you love a bargain, do you?
Love a falling knife.
Yeah. You should buy stocks the way you buy Prados.
Life, yeah. Brand new.
Brand new. Buy the good ones.
Yeah. The serviceable ones.
Yeah. The ones that have like quality, like a Toyota. Just think Toyota. Yeah, all IPOs, get amongst it. So there was the question sent through a bit earlier on, which was from...
Yeah, we've covered more questions than usual. Being one.
Is this the question? Yeah, this is bizarre. Okay, this comes from Leverage. Leverage?
Leverage.
With a French accent.
How you 4-year-old now says, au revoir.
Oh, God. Is that a shacket again?
It is a shacket. Yes, thank you. Thanks for noticing.
Anyway, hi, folks. Oh, he's got some beads on his arm as well. What does it say? Daddy.
Yeah.
Oh. Hey, folks, let's talk leverage. Who gave you that?
My kids.
Oh, yeah. Hey, folks, let's talk leverage, you say.
That's what happens when our editor isn't. What do we call it? Editor? When our editor is in the room.
What's your view on geared index funds? Say like the S&P 500, ASX 200, or some similar low-fee, broad-based ETF as part of your core/bottom drawer to sit alongside the rest of your non-geared ETFs within the core portfolio or even inside super.
Why not gear everything?
Why just gear everything? But the next, it's kind of like another question, this next bit, but we'll take them both. I have heard at times this quote-unquote story that geared/leverage ETFs are only beneficial to use in the very short term. But I've also read about the strategy I mentioned, long-term holding of these. Yeah, so let's start with that second bit. Probably the thing that you might be getting confused with the short term is the inverse ETFs.
Yeah, do not. Yeah. I mean, not that that's a recommendation. But
yeah, inverse ETFs can also be leveraged. So people sometimes confuse them, but they're the ones that move in the opposite direction of the share market. They're typically used in very short-term time windows because they're
BBOS.
Bear and BBOS, yeah.
BBOS.
They're most common. Is it SNAS from Globalx as well, like SNAS?
Gesundheit.
So those tend to work in the opposite direction, and they tend to be only effective to hold short term. Like some people have those inverse ETFs in their portfolio, Drew, like as a bottom drawer thing, just in case. But that doesn't make any sense.
I was one of those people, similar on the...
You wouldn't do that because you'd only use it when you need it because they're not cost effective or just effective in any way to hold long term. But for leverage ETFs, like what's in my portfolio, GGUS,
yeah.
And then you've got like
LNS.
Yeah, and you've got the wealth builder funds from beta shares that have just come out. What do you think about those leverage products?
I think one, it would put aside the people I speak most regularly to are retirees, which means we're less concerned about leverage. We're more about, do you have enough capital to retire? How to make sure that gives you the lifestyle that you want. But if you're talking about accumulation, if you what I like to think about sometimes is you compare property. Everyone compares property to shares and how much better property is done in the way they feel like it on smaller amounts of capital. And that's because you can have more leverage. So why wouldn't you add some level of leverage to your share portfolio and do it in a way, I think we're all burnt by margin loans back in the day.
Yeah.
Where you had to put more money in if your portfolio fell. With geared ETF options, you can actually keep investing. You don't get a margin call. You don't have to worry about that. So I think they have a better role to play as long as you're comfortable with the risk and volatility that comes with them.
Good point.
I still don't necessarily see them as a core always. I'll probably use them more tactically.
Yeah.
So after a crash, or not after a crash, during a crash, because you never know when the bottom is. Mm-hmm. If you have cash and you want to get the most, upside as possible, you might use these to then hold for a 2-3 year period. And not that we've seen a crash that lasts more than 4 days in the last 10 years, but the bottom of 2009, we used leverage and we used index to increase our exposure quickly. Mm. And for us, the key is that it's unemotional. If I tell you to sell a geared ETF, you're not attached to the dividend it pays. You're not attached to the company and how well BHP or CBA is doing. It's just an ETF that we can the ETF providers, but it's just a leverage ETF, that we can get rid of.
It's a tool.
Yeah, exactly.
If you're watching, I'm just showing you on the screen now the performance of GGUS. So imagine you've got the S&P 500, which is going bottom left to top right over a long period of time. That's similar to Head and Shoulders.
High highs, lower lows.
Yeah.
High lows.
So you got this line that's like, if you're in statistics, it'd be like the line of best fit. And it goes bottom left to top right. But then there's this other line that just zigzags the whole way up, like all the way to the top of the chart, then down to the bottom, then up the top, then down the bottom. But ultimately, yeah, it has outperformed as we sit here today.
At the moment. You see how quickly it goes from being that far ahead to being on the same return?
It goes from being like 3 times the market to below the market.
In 3 weeks.
Yeah. This is the thing. And that's why I was saying, like, you know, it's like in that Simpsons movie or whatever episode where Bart and Homer are chasing after the pig that's in the sky, and they're like, it's still good, it's still good. That's how I felt this whole year about G-Gus.
It's just a little dirty.
It's still good. It's still good. It's still good. I've been chasing that pig all year with my G-Gus, being like, don't worry, Drew, she's coming, baby, because once Trump moves past his tariff thingo, the market's going to rip.
Look out for the meme from Adrian on this.
The market's going to rip, and G-Gus is just going to go to the moon. So that's my theory.
All right.
And obviously, this is not financial advice.
No,
this is me
all.
talking absolute gibberish.
I think it's okay for younger people.
Oh, yeah. Back to the question.
Yeah.
Yeah, I wouldn't use G-Gus.
No.
I would use the Wealth Builder ones, the modestly, because Wealth Builder's like...
G-Gus like 3 times.
Yeah.
You only need 1.5.
Currently...
naturally more volatile.
At the time of recording, G-Gus is 2.24. It changes. Currently 2.24 leveraged.
Yeah.
I wouldn't do that. I don't think I could live through that. Maybe like the Wealth Builder ones, they're the diversified ones, and I think they're only like 30 to 50% leveraged.
Yeah.
So a really small amount. And we had Cameron Gleason on the show, who is a senior investment strategist at Beta Shares. He was on the finance podcast and he was explaining the Wealth Builder funds. So their cost of borrow inside of the ETF, Drew, is less than a mortgage.
Yeah.
Because they're institutional.
Oh, they're doing like a commercial bill rate.
Exactly. So they're able to borrow the funds that allow you to get the leverage for less than a mortgage rate, which is incredible.
Yeah.
A margin loan's like 8-9%, sometimes more. So I think that they're a superior option to margin loans. And should they be in the core? Maybe like Drew said, maybe not. Inside super? Maybe.
I mean, it's the only way you can really get proper leverage into super.
Yeah.
I never see them at the core in a massive way, to be honest, and I don't think I'd be comfortable. More the risk that you see it moving and want to change it is where I always see the concern with leverage.
Mm. You could probably use it. I don't know if I get a bit nervous about talking about leverage ETFs in the US because you've got the currency, which could change pretty quick, but you've also got the US stock market. Seems like I don't want to say it's overvalued, but there's a part of me that thinks it might not always be this good. So I think you're more inclined to use leverage when something is more of a sure thing. Like here in Australia, we've obviously got a chronic undersupply of properties. So you can typically be pretty confident as long as you're buying right that you can use leverage to buy a property. But using leverage in shares is risky in my opinion. So I don't think it's right for everyone. I don't actually use any of them. Other than for this game.
I've used one before that everyone who listens to this show for long enough knows about. B-Bus.
Then Razor writes in. Razor Ray from
thought the market was overvalued. Then he's hit 8,800.
What? Ray says, I'm in Perth and all I need is someone to show me how to physically buy Australian and US shares on Interactive Brokers global share trading platform. I can't get much from their own tutorials. Who could I approach? Any suggestions? Thanks, Ray. Hey, Ray, thanks for writing in. I would suggest that if you can't use Interactive Brokers, to find a broker that works for you, or see a financial advisor who can help you invest. The cost of getting it wrong can obviously be substantial. I don't use Interactive Brokers. I opened an account many years ago. It was too probably tradery focused for me.
Struggled.
Yeah. So I went with something simpler, but. That's not a recommendation, Ray. Just go out and get good financial advice if you like.
Yeah.
What were you saying before about 8,800 points?
I was saying that I thought the market was overvalued. That's why you buy B-Bus.
Yep.
And that was probably when the market was at 6,500.
Yeah. Okay.
Yeah.
If you could buy, hold, or sell, I'll just give you a list of companies. You give me buy, hold, sell.
All right.
TPG Telecom.
Buy.
AMP.
Sell.
REA Group, realestate.com.au.
Hold.
News Corp.
Buy.
Pinnacle Investment Management, P&I.
Hold.
Why were you hold?
Or sell.
Why were you really?
Yeah.
Really?
Just the multiple.
Yeah, it's expensive.
Yeah.
Why were you a buy on News Corp but a hold on REA Group? What do you know about News Corp that none of us know?
I love the digital media assets of News Corp, but think REA might have some struggles in a competitive market. Domain coming in, CoStar buying Domain. There's going to be a bit of ructions and see what happens. So I know it's a big, important part of news, but I also know News, Dow Jones, all those other resources are quite good.
Yeah. So buy on the old rupee.
Yeah, love.
Rupert Murdoch. Much love. All right, do we have time for one more question?
Possibly.
Okay, let's go.
Dad joke from Anthropic here too.
Okay, great. There are 2 questions that are both to do with Roundup, like micro investing, and particularly Raise, both of them from Mickey Mouse and Tristan. Mickey Mouse asked, what are the fees for Roundup investing? That was the first question. Second question was from Tristan. First time actively investing, and my question is, am I doing this right? I downloaded Raise, invested $1,000, and then they go on to say a few other things. They mention which portfolio they might like and which it has a couple of ETFs. Is there anything missing or am I on the right track? We can't actually tell you, Tristan, whether or not you're on the right track because that would be what we call personal financial advice in Australia. But I can speak generally about Raise for Mickey Mouse's benefit too. So with the Raise Invest platform, it's an app and you invest through the platform into diversified portfolios of ETFs. You can also pick some shares and stuff like that. And you pay an account fee for that, depending on which portfolio you use and which features you use. It's not like a traditional share brokerage account where you pay per investment. You pay like a monthly fee, like a fixed fee, or a little percentage there. I think maybe the reason that we're getting this question now, these types of questions, is because Raise did make an announcement. They did some portfolio configurations recently. So I have a Raise account. I automate it. I've got a JARS account, which within my Raise account, which is it's like a portfolio within a portfolio, Drew. So you can have like your main portfolio, which is like say like a parent's portfolio, and then you can have an unlimited number of JARS accounts, which might be like new boat, new Tesla, cashback, and you can do Raise rewards and then fund all those accounts as well. So just speaking generally about Raise and microcap, there's other microcap investing apps like I think Sharesies does small amounts. A few of them do small amounts. I think they're good, but I don't just do that. I also have other things that I do. Do you have a Raise account?
No, I don't.
Okay, I know Jamie does. Jamie's a big Raise guy. Anyway, so one final question for you, Drew. How did your photo shoot go?
Well, I believe the team seemed to have a good time.
You have to roll out some AI.
Son's, in my what? Oh, the editing of my no, I'm not giving myself big white teeth again. Not after last time. It was quite good. The team got some action photos in there. I didn't. I think you did. It was quite fun. We're launching a new website. Our team's been growing, so a good opportunity to get everyone in. But yeah, it's always a fun experience getting professional photos taken when there's a whole office of people watching you. Yeah, getting it all reviewed at the same time.
Oh, bloody oath. Now, you do owe us a dad joke, so we'll get that. There were some good questions sent through this week. Leverage, Mickey Mouse, Tristan, Rohan Task.
I love Leverage.
Razor. Yeah, some great questions sent in. Write into us if you want a Rask Core membership, 60 days on us. Let us know. Write in and get access to our membership community free of charge. Drew, you do owe us a dad joke.
And I do have to say happy birthday to my son, Joseph, who turned 7 yesterday.
And what did Santa bring? No, what did
his father?
Yeah, what did his father bring? Different time of year.
I feel like this could get a bit of vitriol. A PS5.
PS5.
A PS5. Yeah.
Don't say it too loud.
Yeah, don't say it too loud. Don't let any other parents out there know. I mean, it's mainly for me, and it's very limited in the games and time. We're not that it's that strict, but we really only have screen time where we're in long drives.
Yep.
So
what does he play the PS5 in the Prado?
No, he plays his Switch. Oh. Usually Minecraft or Mario Kart, as we do.
We should buy Roblox shares while we still can.
Sure.
Okay, cool. That's great. Good present. Great present.
Yeah, for me, definitely. Yeah, so I've been spending a lot of time in that toy room.
Yep.
I'm leading on. I'm trying to get more efficiency into my life, so I've gone to AI for this week's dad joke.
Yeah, great.
Probably shouldn't lead
it. Be a
with
solid
that,
8 out of 10.
I should have just claimed it for myself. But talking of drives, I'm terrified of speed bumps, but I'm slowly getting over it. See, it's got the double zing on it too.
Yeah, it does. It does.
Zing,
yeah, thank you, Claude.
Yeah.
Really appreciate your work, Claude.
What Claude said, it's got everything. The perfect setup, unexpected punch work, and that groan-worthy pun.
Very good dad joke, Drew. Well, Drew Meredith from Waddle Partners, looking great in the shacket, mate. Really appreciate your time.
Looking great in the Calgary Flames jersey from 1997.
Number 16 on the ladder. Here we go. Drew, absolute pleasure.
Good to see you.
Thanks for watching this episode of the podcast. If you want to hear more from us, you can get daily videos and podcasts on Rask's YouTube channel. Or if you want to enroll in a free course on investing, property, business, money, you name it, you can join over 34,000 other students and enroll in a free course on the Rask website. Simply head to www.rask.com.au and follow the prompts. Thanks for watching this Rask podcast.